Welcome back to the Mining Pod. Today on the show, I'm joined by Alex DaCosta and David Yee of Aspen Creek Digital Corporation, or ACDC. We talk about their newest Texas facility, including their 27 megawatt deployment with Compass Mining, working with ERCOT in an energy-first approach to mining Bitcoin. David, Alex, thank you so much for joining the Mining Pod. This one has been a long time coming. Really excited to talk about Compass's new deployment with ACDC, but even more so than that, you guys are such an interesting mining firm that's really come out of the bull market and is now dominating the bear market along with a few other companies. So really, I think the best part of this conversation is going to be about your firm's strategy and how you guys are working behind the meter, renewable energy, a hosting model. There's so much to talk about. But first, welcome to the show. And if we could get an intro from both of you guys, it'd be great. Maybe start off with Alex and then to David.
Thank you so much for having us. It's a pleasure to be here. So I'm Alex DaCosta, the CEO of Aspen Creek Digital Corp. My background is in fixed income, structured products, and asset finance. So I spent my career on Wall Street. Unfortunately, did have to live through a few bear markets, which is coming in handy right now. But came to the ACDC team as kind of one of the original kind of co-founders and CEO to really help bring new renewable energy online and to find a better power solution for Bitcoin mining. So I'm really fortunate to be part of this team and excited to tell you all about it.
Yeah, so I'm David. I also have a finance background. I was a banker for over a decade, covering mostly metals and mining, but pivoted in my most recent role as head of crypto investment banking at a bank. And that's where I really got to spend a lot of time with Bitcoin miners. Many of which have been on the show. And Will, I got to give you a shout out. As I was beginning coverage of Bitcoin mining, this show was a huge source of information. And so I got to give you props for that one. But yeah, in that role, like Alex said, we put our heads together and we realized that there was a better power solution for this industry. And so we, have one thing led to another, and we're here now with ACDC, and we're really excited.
Awesome. Thanks for the intro. The finance backgrounds are probably coming in handy right now with all the liquidations and fire sale of assets going on. We'll definitely get into that in a second. But let's start off with the new Texas site. Just for the audience, yes, this is a little bit of a shill, but bear with us because it is going to be useful as we talk more about ACDC's strategy when it comes to procuring sites. But let's start off with the new deployment. Internally, we call it Texas 4. It's our fourth Texas facility. There you go. You guys probably have a different name for it. We're taking 27 megawatts off your guys' hands for hosting over like the future deployments. It's not starting there, but that's where it's going. The site itself is larger though, and then the energy behind it is even larger than that. But Alex, if I can hand it up to you to sort of get like the layout of what's happening with this new site, and then let's move into talking about how the energy is procured, how you guys are working with the local communities, all those sort of things.
Sure. So what we call it is Longbow. And so Longbow is a 30 megawatt site that is co-located behind the meter with 87 megawatts of solar. So you guys are the wonderful tenants of most of that. And I will say there are a lot of folks that would have liked to be there as well, but we're really excited to be working with you. Longbow had been a long time coming on the solar side. And so I think from a broader scale, what you'll see with ACDC is that we really step in and become the power off-taker in scenarios where we can be additive to that solar project. So if there were a solar project that had, 5 investment grade utility scale off-takers right next to a massive, city, you wouldn't necessarily need ACDC there to help stand up that solar. But the purpose of our company is to help bring brand new renewables online. And sometimes that means that either the structure is a little bit funky or it's a little bit further out, in West Texas for some of our later sites where perhaps there may not be as much, merchant demand for that power. And so in this case, there were a couple of other opportunities for the offtake, but we really felt that ACDC would be a great fit for the project, and particularly Bitcoin mining, just because, as Bitcoin mining is such a forgiving load for intermittent power, such as solar. We do always interconnect with the grid, but I think that ACDC was really excited to take on this project to show, how we could really be additive to a solar project.
No, go ahead, David, if you have anything to add there.
Yeah, the only thing I would add is we're super excited because we just recently energized the facility. And so we have started taking some initial deployments of miners, and we have some of our own that we're also deploying there, but that number isn't very large. And we're excited because Compass is going to continue to send us miners, and we're going to continue to deploy them over the next couple of months here.
Love it. Let's talk about the behind the meter strategy and picking up all this energy in different locations. How are you guys working for renewables? And there's a lot of stuff that was included in that On the Brink podcast you guys did a few weeks ago with Nick Carter. And I would definitely steer the audience to go listen to that conversation after this one for more of like a general strategy for you guys' energy deployments. But be curious to get a little bit thoughts as it pertains to this Texas site and maybe the Colorado site as well that you guys have booted up. How do you guys go about like picking these sites? What's the procurement process like to select where you're going to make these huge loads and put them on the grid? Because 87 megawatts, that's not ginormous in terms of like some of the other mining facilities I've seen out there, but it's not small either, right? Like we're talking decent amount of energy coming onto the grid. Dave, I'm gonna throw it over to you for that question. What's the procurement process like when you guys are selecting sites?
For the most part, most of our sites that we've put into our pipeline are projects that otherwise would not have been able to stand up on their own. Like Alex mentioned, if there was a great credit utility that wanted to take the full load as an offtake, they most likely would not have worked with a company like ACDC. So we find these opportunities in various markets, and so we're not only in Texas, we're in Colorado, Arizona, Montana, New Mexico, some other states as well. And in each of those jurisdictions, we find opportunities where the behind the meter solution is advantageous, and also in jurisdictions and power grids where we have the ability to be a bit more flexible with how we manage that power. And so that's how we've come up with the various sites. And our sites do range in size. Our solar facilities range from anywhere between around 50 upwards to 400 megawatts. And so our data centers will range anywhere between, let's call it 40 to 200 megawatts. In total, we have a power pipeline that we're looking to develop that's in excess of 3 gigawatts over the next 3 years. And so we're pretty excited to endeavor on that.
And I think just to add on what David said, one of the key components of how we select a site is, our renewable power development partners who are part of the founding members of this company. Those guys collectively stood up over 13 gigawatts of power over the last 10 years. And so, they spent years amassing this power pipeline, and their pipeline is much larger than ours. But to put it in context, it would take about 5 to 7 years to replicate this just north of 3 gigawatts of power that we have exclusivity on development. And so they specifically chose sites, not only, as David said, where we can really execute on our power strategy, but also where they have very deep local expertise. And I think that that's what's incredibly important, is that even if it's, a greenfield project, this is not a greenfield locale. And so our guys have, very, very deep relationships in those local communities, with the regulators, doing all the interconnection work, et cetera. And I think you're really seeing that play out in markets like ERCOT right now, where you're seeing, this huge demand pipeline to consume power, which is overwhelming for ERCOT. And so having folks that have dealt in that jurisdiction for well north of a decade has been really helpful to us. And it's not by mistake why we choose those sites. I will just add, finally, the sites that we have in our power pipeline, ACDC, has access to the power for the usable life of that solar asset. You're looking at 30 to 40 years. And so we've tried to be very strategic about, what else that power can be used for. In addition to ACDC, don't forget that the solar developments are sized larger than our needs. You will typically see us being 2/3 to 3/4 of that site. And so being cognizant of what else can this power be used for locally beyond ACDC's needs. We really did try to be very thoughtful about it. We're not looking to just put up solar, where no one else would like it.
Yeah, and that's a great point that Nick sort of zeroes in on the podcast that you guys did with him, is the fact that you guys often build out more renewables in the area that you're working in and then push some of that to the community. And there's some excess as well. Tell me a little bit about the strategy behind that. I think that answers a lot of the critics' questions about these solar projects that Bitcoin miners are using. They're saying it doesn't really net anything out because you're just sort of stealing that renewable energy from a community. But you guys sort of rebuttal that pretty strongly by building out additional capacity. We're not using all the capacity. Be curious if I could get an answer to that, and then a little part about the economics behind it, because you're often having to build redundant power, I would assume, if you're going to roll out a plan like that. Does that redundancy help you guys out? Are you able to sell that energy to the grid in a different way and recoup your costs?
Yeah, you hit the nail on the head there. So if you take our second site as an example, so Longbow, which is your Texas 4, it's a 30 megawatt data center with 87 megawatts of solar. So every day when solar is producing, we're adding upwards to 50 megawatts plus of power to the local community. And so when we thought about how can we use Bitcoin mining as a tool to stand up new renewables, it was not with a selfish nature of, hey, let's size it so that there's only ever going to be solar directed to the data center. It's how can we structure an economic incentive so that we can actually be additive to the grid. To your point, though, we have to rely on other power sources, and in every instance it'll just be the grid. And so if you think about what our kind of mix of power is, if it's just solar only, it's going to be something like 40% directly from solar, about 60% from the grid. Obviously, the grid then has its own component of non-carbon emitting sources as well. That grid interconnection is extremely important because it allows us to participate in ancillary services markets. It allows us to sell the power back to the grid when obviously the grid is asking for it. And you see that on a daily basis over the summer, right? The pricing signals are there. They need more power. What we're really excited about when we construct our behind the meter solution is that when we curtail and we shut off our mine, we're actually adding back physical solar power to the grid, which I think differentiates us versus a lot of other Bitcoin miners that are out in the market who have, kind of purchased power and are just giving back the power that they purchased. In our instance, this is brand new power that otherwise was not there before we arrived. And so we're pretty proud of being able to have created that business model.
Great. Alex, I'll leave it there if you have anything to add on top of that. But unless you don't, I can move on to the next question. I've heard that you guys are both ERCOT whisperers, that you guys know how to deal with the local grid a little bit. Be curious to get your guys' thoughts on that. What's it like to go through the whole process with ERCOT? What's it like to find a site, develop energy for the site, go through the whole regulatory process, get miners there? I think this Texas site is probably a good example of it, and be as high level or as detailed as you want, as granular as you want on this. But I know a lot of miners who are trying to go online in Texas, and it's difficult to do it because there's so many other people jostling for the same room. Alex, I'll hand it up to you, and curious to get your thoughts later, David.
It's a really good question because you want there to be some kind of obvious answer. We hired a firm that no one else did. We do have our secret weapons, but our secret weapons are, our boots on the ground and our development partners. And like I said earlier, those guys have been doing this their entire careers. I think what's most important to understand about what's happening right now is really just about communication throughout this energy transition. I would almost, compare it to renovating an old house. And by no means am I calling ERCOT an old house, by the way, but it is like taking an older home and you're trying to install some kind of, new stereo system. I guess we don't really need that anymore, so I'm still dating myself, but some kind of new electronics or some kind of new plumbing with the existing. And that's exactly what you're seeing with Bitcoin mining is that, we have a flexible load, but the software and the technology that we have developed needs to be explained. And it not only needs to be explained from a physical perspective and an interconnection perspective, it also has to be explained from a legal perspective and a regulatory perspective. And I think that is where a lot of the hardships are coming from. First of all, you have a very interesting process where really anybody with $1,000 or a few $1,000s can kind of put their permit in the queue, right? And so you're seeing just gigawatts and gigawatts of potential demand. That's really hard for ERCOT to manage. And I know, our friend Blake King has said some wonderful things about that in terms of let's be very realistic about who's standing in line. Are they really capable of delivering on that? And I think that one of the things that we try very hard to do is be very transparent as an organization. And I think that transparency is of the utmost importance at the local level, right? Manage those expectations. When you say you're going to be 30 megawatts and you want to stand up 87, stick to that, explain why. But again, when you come back to this communication issue, it is aligning like the physical and the legal and the regulatory and the economics and making all of those languages communicate, right? And that's where kind of like the renovating the old house comes in. And so I think that's where we have spent most of our time. And I would also maybe kind of finish with that is that we started ACDC, not because the world needed another Bitcoin mining company, but because maybe we saw an opportunity. Well, not maybe, we did see an opportunity to really start with a power first perspective, because 90% of the cost of mining Bitcoin is power, but it's also the hardest part of it. And so when we led with this power first model, we didn't just lead with it like, in theory, we led with the people that really knew how to do that. And the kind of the ASICs and all of that is in the operations are very important, but they're almost secondary. If you don't get the interconnection right, you're not turning on. And unfortunately, we are seeing a little bit of that right now. It's also not something that a check can solve. I think that you have to get a lot of folks in the room who all have very, very different expertise and find a way to kind of communicate the commonality with what you're trying to do. And most importantly, what you're trying to achieve. I think my final point to this is that when you show up in ERCOT and you want to consume load, you're going to be waiting a while. There's a lot of folks that want to draw on a lot of power. When you show up in ERCOT and you want to add power to the grid, in particular renewable power to the grid, that's a conversation that is a little bit more interesting to them. And I think that that's one of the things that we are very cognizant of is that, folks are looking for new renewable power to bring to the grid. They are willing to, be open to our, kind of advances in that department.
When we approach ERCOT, we do so with power developers who have a very strong and deep understanding of what they're solving for. And I think that differentiates us versus a lot of other people who are applying for load in Texas, is that they're coming in saying, hey, I need power 24/7, please give it to me. When we come in, we're solving for the problems that they're facing. And I think that it's just a different discussion that we're having. It's funny, when the new rules of ERCOT came out, we were some of the first people to realistically engage with ERCOT to understand what they were solving for. And I think that went a long way. It's just having those people that have that deep experience helps us solve these problems.
Some follow-up questions, if I can, on this subject, because like you said, Alex, there's a few people waiting in line. I think it amounts to a few 100 plus megawatts. I've heard very high numbers on this. Don't know what's accurate, what's not. You guys probably know a little bit more than I do, but I am curious to know about the process itself, as much as you guys can speak to it or sort of reveal how the process functions. ERCOT's like this quasi-government business entity that regulates on-grid activity in Texas. There's been so many Bitcoin miners coming to them. Do you guys get the feeling that ERCOT is pretty happy dealing with all these customers, or do they see an energy provider or an energy off-taker as that it's pretty agnostic and they don't care too much? Alex, I'll throw it up to you, get your thought on it. But again, like we're getting so many questions about ERCOT these days. I'm curious if you guys have any additional information.
Again, I think, my understanding, and I'm by no means an ERCOT expert, that's very much our power folks. But what seems relatively clear to me is that, again, having transparency is going to be paramount for them. My background, as I mentioned, is fixed income and it's the capital markets. We used to, it's like trading stocks, but obviously a lot more opaque. We used to have, a term, and everyone has this in the market, of the new issue process. And you come in and you say, I'd like to buy X number of shares when this thing goes public, or I'd like to buy X number of, bonds, et cetera. You always try to tell clients, don't pad your order, right? Don't assume that because the book is 5 times oversubscribed that you should make your order 5 times as large to get what you actually wanted in the first place. And I think that ERCOT is feeling the exact same way right now. don't come to us and say that you really want to stand up or want to draw on, I shouldn't say stand up, that you want to draw on 400 megawatts when you haven't thought past putting in your application for 400 megawatts. And so I think that my personal opinion, and this is truly my personal opinion, is that there probably is a degree of frustration with just the uncertainty of, you say you want it, will you be there to consume it when I give you the approval, et cetera. That being said, from where we sit, the state of Texas in general has gone out of their way to be very welcoming to Bitcoin miners, right? And I think that at the end of the day, what we do, right, this ability to be a flexible load, this willingness to shut off during these peak moments, that's kind of capitalism at its finest, and Texas loves that. And so I think that ERCOT does have a level of appreciation for the flexibility of the Bitcoin mining load, but then the devil is in the details, because the flip side is it is exactly that. It is exactly flexible. And so I think going forward, again, as David mentioned before, the Bitcoin miners or the hosting, providers' ability to appropriately communicate our behavior to ERCOT ahead of time, to be very transparent about, this is my threshold on power pricing. This is when you can expect me to draw on the power. This is when you can expect me not to. With us, with solar, this is when you can expect us to actually sell additional power back to the grid. Puts them in a lot easier of a place from the predictability perspective. So I know I've given you a completely wishy-washy answer, but I think it really does come down to transparency. Everywhere from transparency of your ability to stand up in the time frame you say you can, to your ability to draw on the power when you said you may want it.
David, any follow-up thoughts on that?
No, I think Alex handled that one pretty well.
Perfect. Okay, we'll move back into your wheelhouse. No more ERCOT questions. We'll take the pressure off of that subject. So I am keen to learn more about it, because I think there's just going to be more problems there in the next few months. Let's go to some headlines. Compute North last month, Core Scientific, Argo Blockchain, Iris put out a notice yesterday. Just have some very interesting and quite different cases of distressed assets and distressed miners. The four I just mentioned, every single case is different, from Chapter 11 all the way to just SPVs going to default. Some of them will be okay, some just need to be restructured, and some of them might not be here next cycle. And that's just how the mining business is, which pivots us towards ACDC, sort of newer kids on the block in terms of how long you guys have been around. You guys aren't Bitfarms, it's been around since 2016, but you guys have a ton of experience on your belt. You guys have tons of different energy providers who have been in that industry forever. You guys both know the finances, obviously coming from Wall Street backgrounds and whatnot. Curious to get your guys' thoughts on where we're at in the mining cycle and who's going to survive building these large mines in Texas and other places. Like, what's the secret ingredient at this point to be standing up large mines like the new one in Texas you guys are just putting up? David, I'll hand it over to you for that question.
Yeah, I think that in order to build a sustainable operation, you need to be able to control the costs that you can, because the revenue is just so unpredictable. And so how can you build as much protection to the downside as possible? The great thing about Bitcoin mining as an industry is that there is some inherent downside protection. As the higher cost operators come offline, hash rate drops and it makes it more profitable for everyone else to mine. And so if you can be kind of the miner of last resort by being the lowest cost producer, then you will never really have to shut off. Now, that is under the presumption that, you finance everything with equity. And I think what a lot of the, peers have struggled with recently is, and I listened to, you had Ben on earlier this week or last week, and he made a great point. It was growth over cost control. And, I come from the metals and mining industry, where in gold and copper and many other metals, there's a lot of cyclicality there too. And the best operators have always been able to manage their costs to the downside. And you always want to make sure that you're not, selling the present for the future, and that you're always managing your businesses accordingly. And so just to add to that, from our perspective, when we have thought about these sites from a power first perspective, it's always been, how can we control our power costs? And so you have a couple of ways of doing it. You can go and just enter into a hedge, which is very costly and can be extremely costly if the markets move against you, right? If you enter into a 5-cent hedge and forward markets move to 3 cents, you're going to be posting a lot of margin or collateral because you're going to be in the negative, trade position. So it's how can you figure out how to secure your power, or how can you create a power optimization construct that can help you control your power? That's kind of what we've done here. And so, when we enter into PPAs with our solar, solar today, it's going to be wind and batteries in the future as well. Let's just take solar as an example. We enter into a fixed price PPA. So it gives us a really, really strong base that we can work off of. We know where we can control our costs, and then we know what we need to add to it in order to create that low cost position. And, I think we've been somewhat lucky where building in a bear market has forced us to be extremely critical on what our costs are. I mean, maybe if we had stood this company up 2 years ago, we might find ourselves in a different situation like many others currently find themselves. I think it's part luck, but it's also part, strategy. So I think that's going to be what helps us get out of this bear market, what helps us continue to build market share through this bear market. And ultimately, I think we'll show to other Bitcoin miners, this is probably the right strategy to go forward with.
I also think, when you ask about where are we in the cycle, it's hard to take a step back sometimes and recognize that what's happening in Bitcoin mining, unfortunately happens to all industries when they're a little bit more nascent, right? I mean, you look at the .com bubble of now 20 years ago, you had a lot of companies that tried to approach certain problems from various angles. Some worked, some didn't. Some worked and maybe didn't even have the best ideas, but they had a better execution. We do have the benefit of being a little bit of a later entrant to this market and having a very intimate understanding of the business model, thanks to David's expertise, and having understanding of other very highly capital intensive businesses, very kind of complicated structuring businesses. Either with my background, our COO, comes from a large commercial real estate background. Our CIO and head of power optimization has 30 plus years in the capital markets and was global head of one of the world's largest, asset managements from a trading perspective. So when you have people that understand, A, that bear markets will happen often, and B, it's natural, and that you just have to manage risk. So to David's point, you have to manage costs and you have to be overly critical. I think we did get very lucky from a timing perspective there. So where are we at in this cycle? I think it partially depends on how drastic the industry is willing to be to correct its course. I think that that's a really big benefit that we have as a private company right now is that, and I'm not just picking on publicly traded companies, but particularly with some of the publicly traded companies or the larger private ones, they were making very broad claims about hash rate, for example. And so now you've said it, right? It's kind of hard to put that toothpaste back in the tube. And so when you start, coming up against some market headwinds, or you start coming up against, some infrastructure delays or some ASICs delays, or just a poor structuring of a deal, it's kind of difficult sometimes to eat crow because you will be, punished for it in the capital markets. So you just have to forge ahead and, make it up in volume. That's sometimes maybe not the best thing to do. We had the benefit of being kind of small and in the corner when a lot of these fires started, and we're able to pivot a few times. But I do think that the market's the industry's willingness to pivot, to burn down what is not working, to truly dismantle, whether it's a power whether it's a power contract, whether it's a hosting contract, whether it's a JV partnership. That I think is going to be the difference. Do you want to, knock your own castle over and start over, or do you want to have the bankruptcy courts do it? And it's not going to be that dire for everyone, but I think, I would argue that some of the moves you're seeing out of some of our peers right now is actually a little bit of like self-rebuilding, and this is how we're going to do it. And I respect it. But I think that what's it going to take going forward? Look, it's going to take capital. But I would argue that it doesn't have to take entirely fresh capital. I think that that's the really big difference, is that there's a lot of trapped capital that is stuck in, whether it's a power contract, whether it's an offsite hosting contract, et cetera, that can be restructured and repurposed. And look, I mean, we're really interested to see how that goes. And very candidly, it's a small industry, relatively speaking, and none of us want to see each other go through hardship. It's not good for the industry. However many ASICs sitting on the sidelines, like, that actually doesn't do any of us any good. I know hash rate maybe stays, a little bit low, but you don't want that, right? So I do hope that collectively we can all start maybe working together in some ways, and you're starting to see that, right? A few more JVs, a few more, kind of sharing of this or that. It's exactly why we love, working with you guys, is because we felt from the moment we started talking about this space at, Texas 4 at Longbow, you weren't just hosting clients, it was really a partnership, right? Because there may be a day that you call us and go, I know I told you I was going to send you a megawatt's worth of ASICs tomorrow, but I'm delayed, right? And the fact that you guys can make that call, and that we'll say, great, we'll work around that. And that you don't feel that you just have to stop calling us. That's a big deal. That allows us to kind of going back to the ERCOT thing, right? It allows us to plan and not get caught off sides.
It's definitely a relationship driven industry. I want to stay on the cost conversation before we close up here, and wondering how you guys think about cutting costs. There's so many different costs associated with Bitcoin mining, so I won't even list them all. The three or so that are coming to mind is, one, how are you guys deploying capital that you get from either raises or debt dilution, like managing the inputs on the output side? You guys have the energy deals, obviously. You have to work with contractors maybe, or like advisors. How do you guys pay for that? How do you guys think about procuring that energy? And then the last bit would be site development as well. There's so many different models. We've seen people put things on trailers and drag them into like a site and just hook them up really quick to a natural gas well. We've seen large facilities built out, just huge ones that can house thousands of ASICs, and they're just bolted into the ground. They're not moving anywhere. So those are three off the top of my head, but I'll let you guys take this question anywhere you want to go. How do you guys think about managing costs, and what advice would you give to anyone out there who is looking to deploy capital into this very nasty market right now?
Yeah, so on the cost side, I mean, we don't make any claims to be the lowest cost builder of data centers. I think what's extremely important is that you clearly define what your costs are, and then you appropriately finance your business to match those costs. That's the key. So you don't find yourself in a liquidity crunch, which is what probably a lot of companies are facing today. There was most likely a race to become public because most thought it was going to become just this avenue in which they could raise capital to fund their growth. And for us, when we think about our projects, we've just recently kind of finalized some work with an engineering firm to come up with what we call our form factor design, which then can be site adapted to any of our locations. So we now have a clear definition around what our costs should be at each of our sites. That now lets us then go find the appropriate financing partners and say, hey, this is how much equity needs to be raised. This is how much debt needs to be raised. And then we can go out and build the site. And then on our power side, we have our power management strategies to manage the OpEx. From our perspective, we think that behind the meter power is one way to do it. If you think about it, many markets, just to give you a quick example, like Texas, transmission charges are based off of the 4 coincident peaks. And the 4 coincident peaks, you can be drawing from grid power. For the most part, we don't have to draw from grid power. We're pulling from solar. So there's already an inherent benefit for us where we don't have to do any we're very limited for CP mitigation relative to others. And so there's ways that you can manage your cost by, structuring your power differently. There's also ways to manage your cost by just appropriately right sizing your CapEx profile. That's for us. It's all about transparency. It's all about how can we, accurately try to define what we need and then go and get that financing before we've already spent the money.
Gotcha. Alex, I hand it over to you for any follow-up on that.
No, I agree with David. I mean, I hope so. It'd be weird if I didn't. But I think, to David's point, it does come down to transparency of cost. I mean, as I said earlier, about 90% of the cost of mining Bitcoin is really energy. And so we started this company with the attempt to isolate that cost, to control it, not just control it for the actual number, but control its flexibility. And so I think that was for us paramount. To David's point, will we be the lowest cost, site developer? Currently, no. Are we the most expensive? No, we're not. But the order of those costs, I think, is really, really important, and so making sure that you can account for the existing costs without having to kind of sell future production is a really, really big deal. And again, to David's point, I think that's what, did catch some folks offside and may continue to. But more importantly, there was a massive fixation on a hosting rate. And obviously that matters, right? The hosting rate obviously affects your margins and it affects our margins. But more importantly, to settle on something that is, well, what is the power cost that feeds into the hosting rate? And therefore, what is the ability to have a long-term relationship with that hosting provider, right? And what are your margins on the other side? Again, I think for us, the cost is equally as important as the transparency of those costs, so that our margins may be what they are, but we at least know exactly where we stand. And look, in a bear market, we've had to be very wily with our growth. Our path to where we are has been full of twists and turns. We got to the place we wanted to get to, which is really interesting, but it is not the way we thought we would get here. And in many ways, I think we're fortunate that we took the path we did, because we did test ourselves along the way massively. So do we have oodles of advisors and this and that? We've got some great free ones, but we probably don't have nearly as many people working here as we expected, for example. We're a very, very lean crew. But then the flip side of that is kind of going back to the original thing about control, is that we are all hands-on every single aspect of this business. And so, we will grow, and we're excited for that. And getting this site up and running, allows us to do that. And then there's some really exciting things on the horizon. But look, a bear market reminds you that you are capable of getting through. You just may have to revisit. And most importantly, what worked for you 2 months ago may not work for you now. And the second you recognize that, whether it's your power cost, whether it's your hosting agreement, whether it's your relationship with your contractor, whatever that is, if you don't have the ability and the guts, frankly, to face it head on and fix it in that moment, that will be the thing that brings you down, right? Like the minute you recognize that there's something that's straining your model is the moment you need to do something about it. I think that a bear market makes that unbelievably obvious. And so, from a cost perspective, our costs are pretty low, maybe not by choice. But I guess it works.
I wish anyone who's listening to this could have seen David's slight smile when you said that there's been a lot of twists and turns, because that kind of gave it away a little bit that there have been. I think that's every mining company out there, though. So there's a lot of people sympathetic to that. Let's finish up, though, and talk about hosting. You guys have pivoted more towards a hosting only model at a time where we've seen one large host in the space have to file for Chapter 11. And the question around it is, does the model work? Is it strong enough to get through different cycles? Are people going to want to continue to pay for infrastructure versus vertically integrating and owning everything in the stack? I think there's a lot of people with a lot of opinions on this, but I'm glad that we got your guys' opinions on this, because oftentimes the people spouting on Twitter are just selling one product. So I'd be curious to get your guys' thoughts on that. Why hosting, and why hosting at this point in the market cycle? David, I'll throw it down to you.
I think if you think about what our goals were for this company, it was to stand up as many renewables as possible. And if we were to be completely vertically integrated and have to then build out, a 1.5 gigawatts of load, that would take a tremendous amount of capital to put forward. This power solution that we've identified, I think, can be utilized not only for our own self-mining operations, but can be used to help other Bitcoin mining operations as well. And so we've taken that strategy and said, how can we figure out how to lower the overall cost of production, not only for ourselves, but for the industry as a whole? And I think that creates a sustainable hosting model, because in the long run, what we'll be able to do is hopefully offer the best hosting rates to customers. And I think that provides downside protection to our customers as well. And so I think that's how we've been thinking about it, from how we just decide between self-mining or hosting. I think if you think about purely just like from an operating perspective, being completely vertically integrated in self-mining means that operationally it's much easier, right? You don't have any other counterparties to have to worry about. So being a hosting provider means that we do have an extra layer of complexity. But luckily, our management team has been able to figure out, hopefully, what we believe to be, a very robust solution from a legal, commercial standpoint that will work for all parties involved.
Cool. Any follow-up thoughts there, Alex?
No, I think, David's right. We figured it out entirely in response to market conditions. And it wasn't just bear market conditions. It wasn't a throwing in the towel of, we don't want to raise extra capital to fill this out with our own ASICs. It was actually the market dynamics shifted such that your ability to control your power input actually put you in a position of, I hate to say, but power of an advantage to be able to provide a better looking hosting agreement. And so you have all these counterparties that are sitting on mountains of ASICs. Yes, you could go procure your own, but why would you? It actually made more sense for us to kind of run our own race and lead with our strength, which happened to be the power side. And so, 5 years down the road, are we going to be 100% hosting, 100% self-mining? We'll see. Again, let's lead with our strengths and let's see where the best opportunities are. But I think it was a really great move on again, it was on David's part. When we started this company, he's like, look around you. There's a lot of ASICs. There's not a lot of infrastructure. Let's, and we've got power partners. Like let's lead with our strengths here. Now, if you didn't control, and when I say control, I mean like physically co-locate behind the meter, control your power. To the extent that we do, hosting can be a very, very dangerous game if you're going after purely market share. And I think that that's, again, a bit of a difference with us, is that we are going after building out these sites to make them economically viable long-term. We do have a wonderful pipeline that we're looking to develop, but we've already got exclusivity on that pipeline. The only way we're actually going to bring it to fruition is if we keep doing what we do, which is just kind of like transparency, one foot in front of the other, control the costs in the order in which they're meant to be controlled, and kind of build in that way. Hosting allows us to do that in the most, kind of risk appropriate manner right now.
Yeah. One observation on top of that is in 2021, everyone wanted ASICs and hosting. In 2022, most people just wanted hosting for the ASICs they had bought the year prior. And it hasn't really been a game to get ASICs, right? ASICs are pretty cheap and easy to come by these days. So I think it's to your point. I want to thank both of you guys so much for joining us on the Mining Pod today. Where can people find stuff about ACDC or your own personal accounts, information of that sort?
Yeah, acdigitalcorp.com, and our Twitter handle is ACDC_HQ.
Okay. Any ship posting on Twitter coming soon from you guys, or pretty corporate?
I mean, the whole cost thing is not a lot of people working here. We're gonna focus on energizing, Compass's machines, and maybe we'll tweak our spare time. We haven't had any yet.
Okay. I'm not the guy to go to for shit posting, but I had to ask at the end there. I'd love to see some spicy meme accounts boot up again. Thank you both for joining us on the Mining Pod. Appreciate your time greatly.
Thanks for having us.